Hi, this is Elliot Wave Sage. Let's go ahead and do a quick market update. Like always, none of this is financial advice. Always do what's best for you. So the Federal Reserve really came out yesterday and wanted to pump the markets. A lot of dovishness out of the Fed got market participants very excited, and a lot of people were offside, trying to top tick and short the market. And what's really happening, since this low in November is everyone knows the market has no business being up here, and they want C, and they're desperate for C. They want a short C, and so they just keep trying to top tick, and the market keeps blowing these people up until they give up. They top tick here, blow up, top tick here, blow up, and yesterday they tried to short into the new blow up. So until that dynamic stops, the short squeeze and the people trying to time the market for B, because yeah, if you know when B happens, you're gonna make a ton of money on the short side, a ton of money, and perhaps a ridiculous amount of money. That's why it's squeezing up, because people know that this is where it's going long, eventually. So they're trying to they're trying to get ahead of this move and B, and they keep blowing up their accounts. So I do not short. I have not shorted that, and since we stopped out on the Russell short, um, it seems like ages ago, back here for a very minimal loss. Minimal. And then after that, it's like sidelines on the indices. Now, I warned you about it extending higher because in an expanded flat, it can break to the all-time highs, and I have these sell areas here. These are areas that I could take another crack at a short with a much better chance. Here is very dangerous because it could still extend, and it looks like that's what's happening. You're getting this extension. And like I said, you could still get 511 on the SPY. And I've had these boxes here. Go watch my videos since I started the channel. That this was a possible scenario, and that's the scenario playing out. That's the scenario playing out, guys. So the market more than likely is going to be supported on all dips until further notice. So every dip is really a buying opportunity to play into this pump until we get to these areas. That's really where I would be targeted. So I'd be targeting Dow 39,000, SPY 510. Until those targets are hit, I expect all pullbacks to be supported, and you should just play what's given in front of you. And I do believe this is looks like the count that we're seeing right here. Went away 3 of 3, right? That was yesterday was like a 3 of 3 moment, and it should just continue to extend higher. There's no reason for it to sell off. There's no news. There's nothing. It's just gonna keep pushing higher, guys. If you're short, you got to rethink your strategy because you're not going to be able to time the turn on B. It's just not going to happen. You're not good enough to know, and you need to be playing buying the dips until this B is set. And I said, what do I look for when B is set? Well, you want to see a one trading day we're down maybe a 1,500 points in one day, maybe even more. When that happens, B's in. Then you can be more aggressive on the short side. But until then, this market wants to go higher into these areas that I have highlighted. And then, yes, there'll be a massive rug pull, fear, panic, screaming on TV, and everyone that's really retail buying in their 401k, they're all going to be like blown up. And then they'll probably capitulate and lose all their money around here. So, you just going to have to do what's best for you. And you just have to watch this market. But this is the market that I see right now, and you'll just have to do what you need to. And like I said, it does seem like the Dow wants to extend up into this B leg, just like that. And then we'll get C. This is what we're looking for. This is what we're looking for, and until further notice, I would just look for the dips to be supported. Money panic buying into the market because they missed the move. They missed the move. So this is gonna go on for a little bit longer, I think. So that's what we're looking at. So the Nasdaq should soon break the high. So what does also that mean? Well, breaking the all-time high is great for the historical market. So I think you guys that are, if you're out there that think Dow's going to 6,000 again and all that, I think this has pretty much quashed that dream. Now that we broke to new highs, we'll get this flat, but that's pretty much all you're going to get out of it at that point. And then with a higher high, you should get some massive gains in the coming years after this plays out. Massive gains. I believe now Dow 100,000 is in play for later this decade. After this calamity happens, this C. Now it could also be a run-in flat, so it may not break this low, but we're looking for a pretty sharp sell-off and an impulse down. And then yeah, I do believe we'll have a mother of all melt-ups happening and would make what we just seen in November look like child's play. What's about to happen when this wave hits? When this wave hits, and I do believe it will extend into Dow 100,000, and then who knows after that? Maybe everything will have the South Sea bubble finally collapse here. But I think this is good. So the historical market says the trend is intact, probably for the next decade, after a rug pull next year of some proportion, perhaps biblical proportion, if we drop down to these areas here that I have highlighted, and then the historical trend will pick back up. So you got to do what's best for you in the market. That's the indices, and then Bitcoin again is struggling here and did not make a higher high. We could have an X wave set. We're looking for at least another push down to 38.9, 37, and this could be an opportunity to buy the dip on Bitcoin in this area. But you'll have to make that case, and more than likely, if the market's going to extend, Bitcoin's connector will extend out as well, and we could probably come back up and test these highs as well. So Bitcoin may provide an opportunity soon for dip buy-in for that. If it were to come down and break, I'm thinking this pivot here, then X is in, and we're going to see a surprise in the crypto market that no one's expecting on the downside. Then oil continues lower again, just like we have been forecasting. And we still have these targets down here, and this is where we're going. So I believe we're in B. It looks like, if I look at this, tough to say if we need more, more downside. We're still in B, but it's in a sideways, consolidation for more downside. Gold, again, looks like it made a three-wave move. It bounced, and so now we're looking for another leg lower for a potential opportunity to buy. Gold again, buy in here is kind of gambling to see if it could go to new highs. I would rather wait for another drop in gold and silver and play this connector if it plays out. Dollar index, this is also telling you there's more upside in the market coming. It is now, by breaking that low, it is confirmed an impulse down. And with an impulse down, it means it will have another wave down, which means the market more than likely will be supported still. So what does that mean in the bigger picture? More than likely, we're going to have something like an A, a B and a C, something like this play out. Something like this. The other option, of course, is it's more bullish than what I show here, and we just get a smaller degree too, and we get a massive collapse, and this will be a massive pump in the indices, and then you set B here in a double correction lower in the dollar in this WXY pattern. So the dollar is showing you now the trend is lower. So the higher dollar is on hold for now. And this should support the market. But if you look, you do have 5 down. So the market, if the dollar index is going to rally here, that means the market maybe do a pullback. But that pullback should be a buy-in opportunity across the market, like I mentioned earlier. And then later, later you could look to see the market top when it's either turns into this and pulls back like that. Then the market could be at a peak, or it drops in a 5 wave move here down, and then the market could peak here. But now with 5 waves, it seems very unlikely the market's just going to crash from here now. The market still will extend higher, but if you look at this, it does look like it's due a pullback, which means the market may be due a pullback soon. The VIX was actually green yesterday, or I think that's what it closed green. So again, if I chart in the VIX, 1, 2, 3, 4, one more low, and I still have this area now at 10.57, and we probably are going to get there. And that's the expanded flat target for the VIX. So just look for that target, and that's what I've had for the last couple of weeks. So the 10-year is still in an area where the move can end. It's not all clear yet, but I did mention that there's a flat scenario where you could still be in 2 here and drop to 3%. And I think if we can break 3.8, that's where the market's headed and should be supported until that happens. And this will be a higher degree correction in a massive flat opportunity in an A, B, C, and then this comes later. But like I've said, this is going to come. So the happy days in the market will end because of the sequence of the Treasury market. Interest rates on the long-term cycle is telling you this move right now isn't sustainable. But what I think is going to happen potentially is you get this, let's say this A, B, and you get this C, and this C is the calamity in the market. This C is this leg here down, and then what I think is gonna happen is the market will peak in rates in a nice 3-wave reaction, and then perhaps at that point the historical trend can continue down into the negative rates like we've seen. If that were to happen, then you can get the massive pump, the mother of all, pumps as the rates collapse. So this is what I'm thinking. This is the bullish situation that I'm thinking is going to happen. Okay, that's the bullish situation that I think is going to happen. 3 waves, historical trend. Now, if you're an Uber bear, you'll say it'll go into wave 3 and it'll just go parabolic like Argentina and a massive crisis in our nation. Then you're back to this maybe it's 0.1% chance of this. Could you imagine, just think about this if you guys follow this, the historical chart, 5 waves up. Could you imagine if the market topped in an expanded flat at the grand super cycle degree? Imagine the trap. Imagine the trap if that's the case. If this is true, if this is going to play out just like I have here, that this is an expanded flat, that this C leg will be something that no one's ever experienced and read about even in the Great Depression. It will come down to levels that are unimaginable if this plays out. And that, I think, is only supported if rates go hyperinflate and go parabolic for some reason. But that's a point, it's a 0.1% chance. But is it possible? Sure, anything's possible. And this could just be a grand supercycle expanded flat correction to correct the cycle from the beginning of the founding of our country. And everyone's looking for, oh, a three-wave move. Oh, it's an impulse. No, it was an expanded flat, guys. It was an expanded flat to trap everyone. And then you get this. That only happens, in my opinion, this rare bearish scenario, if the rates in wave three don't find resistance and they just moon. In fact, you go back to the historical trend, and in fact, perhaps interest rates is in a 1, 2, and we're actually going to break the 81 high in this wave 3 in an impulse in something like this. Wouldn't that be a bitch? Right? Wouldn't that be a bitch right here? A massive A, B, C. And rates go to, let's see, 20, 19, 20%. That happens. What I just showed you in the Dow is going to happen. And yeah, and it will be what a time to be alive. But I don't think that's going to happen. But that's, if you're a super bear, that's what you need to happen, and that's what you're betting. And I don't know what scenario could create that, other than, perhaps default on our national debt, or constitutional, the United States breaks apart, civil wars, that type of thing, nuclear war, Holocaust, shit like that. That's probably what would do something. That would probably do it, right? So, that's the thing. So you can't think of that. So what I do think, though, unfortunately, is we will get this rug pull at sometime next year, just like I got here. May or may not break the low, because you have to respect the run-in flat. And then the mother of all melt-ups, and that's the forecast now. And I do think the shorter term forecast is the market should continue to extend higher. Dips are supported, but I do think we're due some type of pullback soon. And based on the dollar, unless the dollar can accelerate lower, which it's actually starting to do a little bit of, and erase some divergences. If it can do that, then we won't see any pullback in the indices until next year, at least at the earliest. All right, guys, that's all I've got for today, that's it. So stay safe trading, and good luck out there, and we'll talk again later.